Welcome back. Okay, so there you see a lot of broker calls coming in this morning, but the spotlight now we are putting on FMCG. Now, those of you who were observing the market yesterday would have noticed what a big rally we had on a lot of FMCG stocks, and it was being led by Nestle. And even this morning, before we welcome our guest on the show, I want to talk about where the stock is. It was the last I checked, it was the top performing stock on the Nifty. It still is up another 2%. So that takes Nestle's rally to about 10% in just the last 2-3 trading sessions. So what is happening with FMCG in this fourth quarter and what are the expectations going ahead? Abneesh Roy, Executive Director at Nuvama Institutional Equities, is with us now. Abneesh, good morning. What a pleasure to welcome you on Money Control. You and I haven't connected in a while, but of course all of Money Control's viewers know that Abneesh has his razor sharp focus on all of these consumer companies. So I'm so glad you're here with us this morning, Abneesh.
Hi, good morning. Yes, thanks for having me. It's been a good start to the result season, so look forward to it.
Yeah. Oh, yes. Abneesh, I was just discussing this with Shribani Kurian of Kotak Mutual Fund. She was just with us before you joined. And I was like, in last, I don't know how many quarters, maybe years, I don't remember the last time an FMCG came out and absolutely, took everybody's breath away with its performance. But that's exactly what Nestle has done. So let's do one thing. Let's fire the Nestle stock. I want our producers to also fire up just the quarterly performance of Nestle. I mean, double-digit growth? How? What is happening with this company? Let's start with Nestle first.
Yes. So yes, overall Nestle, even December quarter, if you remember, did quite well with almost 18% revenue growth. And they have accelerated to 23%. So I think it's a mix of three things. One is clearly the new MD and CEO, Manish, with ex-Amazon experience. He has made the company much more nimble and aggressive on Q-commerce and e-commerce. And that's also visible in terms of the overall 50% higher advertising which company has done in Q4. We have not seen Nestle do this kind of a strategy for many years. Yes, Q3 we saw first evidence of that, and Q4 we have seen acceleration on both revenue growth and on advertising spends. Nestle globally is also doing that. So Nestle wants to go globally and within India for higher growth, market share, volume growth by sacrificing, if needed, some bit of gross margin, EBITDA margin. In Q3, if you see, the revenue growth was 18%, but the EBITDA growth had lagged. But at 23% revenue growth in Q4, there is an operating leverage benefit in spite of 50% increase in advertising. Because your staff cost or say other expenses don't increase. So this time EBITDA growth is ahead of revenue growth. Now coming to the sector also, clearly all 3-4 results which have come in Q4 all have positively surprised the market. So if you see Bajaj consumer results were extremely strong, and that stock also in the last 15 days has gone up sharply. BST Industries, a cigarette company, saw again very strong revenue growth and EBITDA growth on a soft base. I would expect that going ahead, most of the FMCG results should be generally strong. We have Varun Beverages, AWL Agri, Hindustan Unilever next week results. I would expect good numbers from them also, but obviously it can't be as sharp growth like Nestle, because as I said, Nestle was under-indexed in e-commerce, quick commerce, and in terms of GST, clearly food categories have seen more benefit. Because if you see how the GST benefit has panned out, yes, it has helped every FMCG company, but it has helped food categories more. Because in foods, the grammage addition has happened in noodles or say in chocolates, etc. So consumer doesn't cut his buying behavior because there is some extra noodles or some extra chocolate, right? While in toothpaste or say some of the other categories like soap, initial benefit will be there, but then on a 1 year basis, that will even out. So that I think is one more reason. Yes.
Okay. But Abneesh, and actually, by the way, on our YouTube telecast, we have people asking specifically about Nestle. This is a question from our viewer, Irfan. He's saying, morning Surbi, please suggest if Nestle, should we buy or wait at these levels? That's the thing, because the performance and the stock reaction has been so sharp. Everyone is sitting up and taking note. But I must point out that Nestle has already had a fantastic run. Very quietly, people have been accumulating this stock, unlike most of the rest of the FMCG pack. Let's show a 1 year chart of Nestle. I mean, the stock is at a high. and it's seen a very sharp up move just in the last couple of days. So the question now, Abneesh, is where are valuations? Can they continue with this level of growth? What's the advice?
So three, four key things. One is if you see Nestle, I was checking, only 35% of the street is having a buy. 65% doesn't have a buy. So it is a anti-consensus idea from our desk. And obviously, there is an underweight stance of most investors on FMCG. And there is a anti-consensus buy which we have. So that's why I think Nestle stock, in spite of being very expensive, will continue to see interest from investors who have missed out on either FMCG or on Nestle. Of course, there can always be periods of slight profit booking because, as you rightly said, the stock today is at an all-time high, and last few days, entire FMCG and Nestle has done quite well. Always we can have, if crude goes up sharply, we can have some level of profit booking. But my sense is next 2 quarters, Nestle, in our view, there's a very, very high visibility of high strong growth continuing, double-digit growth continuing. I would expect in the ballpark 18-20% kind of growth continue for Nestle next 2 quarters. After that, the base effect will catch up. FMCG, if you see as a sector, it's a 6-7% growth industry last 15 years average, and Nestle is growing well ahead of that. So after 2 quarters, base effect will catch up. But still, I think after that also we would expect a high single to double digit growth continue for Nestle. But next 2 quarters, I would expect 18-20% growth continue because the GST rate cuts, that benefit, because market share expansion will happen. Company will continue to spend much higher on advertising, e-commerce, quick commerce, etc. And they are very aggressive on innovation. So coming to a specific question, what to do with Nestle? What are the valuation? Valuations are rich. Nestle always is obviously one of the most expensive FMCG stock. With this kind of a number, obviously the question is how high the P multiple can go. I would say that now we are at the top end of that P multiple. So from here on, it is more of a compounding effect which will continue to happen. I think the new MD is aggressive. Overall, Nestle as a template globally and within India is now going for growth rather than margins. And margins also should be fine because of operating leverage. Yes.
Yeah, they managed to maintain, I mean, despite all the spends on Q-commerce and marketing and all, they've still managed to grow margins this quarter, which is phenomenal. So, I mean, the new MD is, I think, really shaking things up. Okay, Abneesh, so let's move beyond Nestle. And I want to tell our viewers some of Abneesh's top picks. So Nuvama's top FMCG bets include, of course, Nestle. Then there is Marico, there is Tata Consumer, there's Britannia, there's Pidilite, and there's Asian Paints. So now Nestle is expensive, like we've discussed, and so much of the rally's already happened. What are the next 2-3 stocks, Abneesh, to focus on? And I'm not just saying Q4 performance or, the immediate next 4-5 weeks, but in general, if I want to add FMCG stocks in the portfolio for the next 1 year, then which ones can give me the best growth? Because growth has been the biggest problem for FMCG.
Absolutely. One good development is it's a silver lining from the Iran crisis, Iran war, that this year the price hike in FMCG across the board will be 4 to 5%. Some will be 2-3%. Some will be even double digits. So, for example, paint sector, we have seen Asian Paint take almost cumulative double-digit price hike in 2 tranches. So yes, this year is a different year for FMCG, where there will be a healthy balance of pricing and volume for most companies, and that's why we are positive on most of the names. In the first half of FY27, El Nino will be a benefit to summer categories because this year there is likely to be very high heat wave conditions. Already we are seeing glimpses of that, but some places we are seeing rains. But I am not really concerned on those rains because ultimately there will be 90-100 days of severe heat wave in Q1 and Q2 that will benefit companies like Varun Beverages, Imami, United Breweries, Quality Walls, and such companies. So that's the good play from a Q1, Q2 perspective. In H2, clearly, we will see that the pricing growth will compensate for any slowdown because of the El Nino, because El Nino could mean that some the rural demand in H2 could slow down, right? El Nino means that the rains will be deficit this time. We are talking about say 8-9% deficit. Obviously, that will impact rural FMCG demand in H2 and possibly early part of next year. But in first half of FY27, we don't see any big impact of El Nino adverse on rural demand because there is a lagged effect, and obviously rains continue till October, right? So it's a lagged effect of rural slowdown in H2 of El Nino. H1 we are fine. Now coming to which stocks to buy at this juncture, clearly you have to buy stocks in which the growth is accelerating, where there is a market share gain, and where there is a valuation comfort. I think Hindustan Unilever is taking some of those. HUL stock, if you see from the 52-week high, still there is huge headroom to catch up with that. Nestle, on the other hand, if you see, is at an all-time high. So Hindustan Unilever, United Spirits, Asian Paint, these are 3-4 stocks which may not be the highest growth, but which offer a risk reward favorable to that extent, because there is a huge headroom for re-rating for these three companies from a next 1 year perspective or the medium term perspective. From a fundamental high growth, I think Tata Consumer, Marico, Nestle, Asian Paints, that will continue to be on the high growth. FY27 paint stocks will clearly see a different and transformative year, because there will be high single digit kind of price hike, plus there will be overall high single digit volume growth also. Yes.
So that's a really important point, Abneesh. I get your your point on price hikes, because the price of oil is higher, they'll have to pass it on. So to that extent, that will help the top line. But intrinsic volume growth, where there is a demand pull or push, and the products themselves are selling. So will paints see that recovery as well? And purely in terms of volumes, which are the companies to watch, even X of the pricing factor?
Yes, good question. Whenever there is a sharp price hike, there is a pushback by the customers because ultimately the disposable income is not increasing to the same extent. So yes, customer will do that. But what we see is in paints, for example, the painting cycle is 4 to 5 years. And typically, if you see, actual paint cost is only 40% of the total painting cost, because 60% is the manpower cost. So customer feels that if I have to paint once in 5 years, should I delay my decision by 1 year? I think that is difficult, right? In India, the construction quality in most homes is so poor that there is water seepage, water leakage, the walls, you need that paint. So plus whenever the tenant moves out. So there is a 85% of the paint industry, which is essentially repainting. The balance 15% is the new homes. In new homes also, if you see, real estate stocks have corrected sharply. But frankly, Asian Paint kind of stock services the rural India, tier 3, tier 4 market, where frankly, there's no slowdown of the real estate. So I would say that still, I think we should build in 7 to 8% volume growth for Asian Paint in FY27 in spite of the price hike. And second, of course, in Q4, we expect now almost double-digit volume growth in Asian Paint, given the overall aggression of Asian Paint. Plus, I think there is a momentum in terms of consumption across the board, which we just discussed. Because of the GST rate cut, I think almost 45-50,000 crore extra kitty is available for consumption, which the government has passed on, right? So every consumption is seeing currently some benefit of that also. Yeah.
Okay, very interesting. So I think your Asian Paints, Lever, these are the stocks that I think you're very, very optimistic on. And you mentioned even Marico perhaps is going to do well this year. Final question, Abneesh. The other thing is that FMCG is a very under-owned sector, right? You mentioned that for Nestle as well, some only 35% analysts have a buy rating on it. The rest of them have a sell rating. So institutionally, no one's really held a large chunk of FMCG because of this underperformance. Do you see that reversing? I mean, that's a B2B question in terms of just how institutional ownership starts changing. Have we reached that point? And that will be a function of a lot of other things. Intrinsic growth in the sector, whether other sectors are performing or not, risk, you want to go to safety, etc. And in your conversations, I'm sure you're talking to a lot of people on the buy side as well. How are they thinking about this change?
Absolutely good question. So yes, I would say that yes, that time has come. So FY27 could be a year of FMCG interest coming back in the investors' mind. Already we are seeing last few days of that. But four reasons which we think. Of course, one is when price hikes happen in any FMCG stock or sector, generally investors like that. Ultimately, that will drive volume growth. That will drive the revenue growth. Question is, will there be big volume destruction? We don't think so, because see, these are daily consumption, right? You can delay your purchase, but ultimately these are necessities. So we don't see big impact on volume just because price hike of 4-5% happens on a sector average. So that's the first point, that overall revenue growth for the sector obviously in last 2-3 years has been challenging. FY27 is a different year. That's first point. Second, of course, what we are seeing is there is under ownership. So, for example, today some of the IT stocks like HCL are down 8-9%. So yes, globally exposed stocks will see that challenge, right? Either because of geopolitical or because globally there is a slowdown on the GDP in most countries. India still will be one of the fastest growing GDP major economies. So to that extent, FMCG is a pure play India consumption story. I think that is also many investors want to really change in terms of their portfolio, that why not go for something where there is more predictability of earnings and revenue rather than bet on a globally exposed stock or industry. That's the second thing. Third is, of course, we all know that crude oil will not remain at $100, right? Already we have seen 15-20% correction from top. So it is just a matter of time where the margin concern on FMCG that goes away. How this industry works is when the gross margin pressure comes, industry takes a price hike, sometimes slowly, sometimes quickly. Paint, for example, I think Street has been very, very positively surprised with the double-digit hike which the market leader has taken so quickly. Then when the deflation actually will happen, so when crude oil say comes back to say $80 or $70, a new normal, I don't think it will go back to that $55-60. But even when it comes back to say $80, I think the FMCG companies will be more than covered when that situation happens. How FMCG sector works in India and globally is they will enjoy 2 quarters of heightened margins. They will not immediately pass on to the end customer, because if FMCG companies cut pricing, the dealer gets upset, right? Because dealers' commissions are linked to the end pricing. So generally in FMCG, we see that 2 quarters they will not pass it on. So suddenly you'll see that Street will start building in higher margins for 2 quarters when the crude corrects based on geopolitical resolution. Geopolitical resolution is just a matter of time. We all know that this is not something which is. Plus, Iran and Russia are also now supplying crude oil whenever they are allowed to. Russia is allowed to currently to India. So that's also a new supply chain from a crude oil perspective. Of course, some of the crude oil refineries have been impacted, but you have to see in terms of overall picture. So yes, the FMCG stocks, I think, will see flavor because of that. Yes.
All right, it'll be a very, very interesting, stage, and I think this is an inflection point because of all the factors that you mentioned. And we haven't seen this. We haven't seen an FMCG revival in a long time. Let's see if this is the real one. All right, Abneesh, fantastic conversation, a very in-depth one, and very, very contextual and helpful for all of our viewers. Thank you for joining in. Wish you a great day, and we look forward to more interactions in the coming weeks as well.
Thank you.
Thank you.
Thanks a lot. Thank you.
All right. Well, there you have it, a very comprehensive take